Hi, everybody. Thank you so much for joining me today. We're going to talk about one of my favorite stocks in the market, one of my personal largest investments, Boston Omaha Corporation. Before we do, be sure to click subscribe if you like what you hear, because I want you to follow all of my personal finance content. I talk about stocks, tax topics, other general personal finance topics. So please subscribe and follow along if you like the video. Okay, so I first invested in Boston Omaha several years ago, shortly after the IPO, and I've added to it many times since, and it's actually one of my largest stock investments. It's actually the second largest investment in my portfolio. So, if you're not too familiar with the company, let's just quickly go through an overview. So, what does Boston Omaha do? So, the short answer is that Boston Omaha itself doesn't really do anything. Boston Omaha is a holding company. It operates four major business segments: billboards, insurance, broadband, and asset management, also known as Boston Omaha Asset Management, or BOAM. So the billboards, insurance, broadband, asset management, that might sound like kind of a big mix of businesses, but they all have one thing in common. All of its businesses are generally designed or handpicked because they have great economics and are designed to produce ongoing cash flow. Just an example, Link Media is the brand name for Boston Omaha's billboard subsidiary. And unlike a lot of the newer billboard companies that are building out these digital billboard networks, Link Media, 99% of its portfolio of about 7,500 billboards are static billboards, meaning just kind of, you know, non-digital, just advertising faces. The ongoing overhead on those is just 6% of Boston Omaha's revenue. That's a 94% gross margin. All right, so now let's get into some of the reasons that I'm most excited about this company for the future. We've all heard the comparisons to an earlier stage Berkshire Hathaway. I actually recorded a video on Boston Omaha a few weeks ago, and I'll post that in the description for this video if you want kind of the longer version of just the overview of the company. But the three reasons I'm most excited are the rural broadband business, Boston Omaha Asset Management, which we'll get to what funds one and two are in just a bit, and the company's Sky Harbour investment. So, taking those one at a time, rural broadband is really a big opportunity. If you've ever lived in a rural area or have ever stayed in a rural area, say in the mountains or something like that, you know that internet infrastructure can be very lacking. So, Boston Omaha, they've invested heavily in building this out, mostly through acquiring existing companies, and now have 43,000 fiber internet customers, mostly in rural areas. They have a big presence in Arizona and Utah and some other states like that. So the economics, like I said in the last slide, economics are great. It costs them about $10,000 per customer to acquire these subscribers, but the ongoing expenses are minimal. So once it pays that $10,000, the customers pay Boston Omaha for their broadband service monthly, and it's a nice stream of steady and long-tailed cash flow. The ongoing profit margins are in the 80 to 90% range. So great business and a lot of growth potential. Number two, Boston Omaha Asset Management. And this is probably the one that I'm most excited about. One thing that Boston Omaha has recently said is that it's starting to see more opportunities than it has capital available, which is definitely a good problem to have, especially if you're a company that has a lot of investors that are confident in you, like Boston Omaha's management. So they're taking a kind of a different approach. They're going to raise some outside capital to go after two specific opportunities that they see in the market right now. The first one is called Fund One, and this is to target built for rent housing, which is a big trend right now. So, Fund One is raising about $100 million to build out a built for rent housing business. They're targeting the Las Vegas and Reno, Nevada areas because great markets for rental right now. Boston Omaha owns about 17 acres of land, and they plan to develop 154 homes in the initial wave of their built to rent business. They want to continue to scale that business over time to the point where it's at about 1,000 to 1,200 homes, and then they want to spin it off as a REIT. They see a big competitive advantage here because there's no shortage of companies doing built for rent housing these days. A lot of real estate investment trusts are doing this, a lot of private investors are doing this, but they're all generally going through home builders. Home builders have big margins. They generally charge a 15 to 25% markup on their homes, and Boston Omaha is taking a different approach in that they're building their homes themselves. They're acting essentially as their own builder. So they're saving that 15 to 20%, 25%, which gives them a big cost advantage over their peers. They're raising capital for this right now, and there's a big advantage to doing that, as we'll get to on the next slide. But before we do, Fund 2, which they talked about at their annual meeting recently, Fiber Fast Homes is raising $500 million to go after a different type of fiber internet opportunity, and this is with new homes. So what Boston Omaha is doing is this fund is going to partner with home builders. They're already partnering with Dreamfinders Homes, just to name one. And what they're going to do is they're going to install fiber infrastructure at the time of the home is built, which is more economical than doing it after the fact. And they're going to do this for the builder in exchange for a 10-year agreement to provide internet service that's paid for through their owner's HOA fees. So this not only gets them a 100% take rate, meaning that everybody who they install the infrastructure on is going to be paying them, but it's a much cheaper build out. It costs them about $2,100 to build out the infrastructure for each home. Each home will give them $60 in monthly revenue for a minimum of 10 years and produce about a 90% ongoing profit margin. This is a business with fantastic economics, and Boston Omaha is seeing more demand than it knows what to do with. It currently has 15,000 homes in its backlog to build out infrastructure, and it needs more capital to meet demand. So it's raising this $500 million fund instead of trying to fund this whole thing by itself. So with this fund model, so not only is Boston Omaha investing alongside its investors in both funds, it's putting in about 10% of the capital in each, so about $10 million in built for rent, about $50 million in the fiber business, but it could also benefit from performance fee income. This is kind of like the private equity model. So in other words, if Boston Omaha delivers for its investors, it would get a percentage of their gains above a certain threshold, in addition to the benefits of its own investment. There's an old saying in investing that the best way to make money is by using other people's money, and they're going to do that. So hopefully, if they can build out the fiber business as quickly and as profitably as they think they can and deliver money for its investors, it's going to be a win-win for everybody, including both Boston Omaha investors and the investors in the funds. So number 3, Sky Harbour, and this is one that I think often gets overlooked in the investment thesis. So Sky Harbour is a company that Boston Omaha took public through a SPAC in the recent SPAC or blank check company boom, and invested $100 million of its own money to do so. It's the biggest investment the company's ever made. So that gave Boston Omaha a 23% stake in this public company. And if you include its warrants, which give it options to buy even more shares, it could be a lot more. It could be almost 30% if it chose to exercise all of its warrants eventually. So like most SPACs, Sky Harbour's stock price took a big hit recently. It's a little over 50% down from its SPAC valuation. But this business is coming along very nicely and has lots of long-term potential. They build out private aviation infrastructure, which is a very high margin business. It's an in-demand business. Sky Harbour's already said it's seeing 30% plus return on equity on its projects that it has in progress right now. And it's still just getting ramped up. It signed a new ground lease at a Dallas airport. Flight operations start in phase 2 in its Nashville location, which was kind of the first one in this, or it started last month actually. And phase 1 flight operations start in Miami next month in October. So it's targeting 50 plus airports to build out private aviation terminals. Once it completes the initial upfront investment, it has very low ongoing expenses, as with most of its other businesses. And this could be a very big opportunity to grow over time. So those are the 3 reasons I am most excited about Boston Omaha, but there's a lot to like about this company. Like I said, it's my second largest stock investment in my entire portfolio right now. I own some in my retirement account, in my non-retirement account, and hopefully you enjoyed that. So Thank you for watching. Be sure to subscribe to my YouTube channel if you like this video and want to keep up with all of my content. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.